Ladies and gentlemen, welcome to another episode of AlphaStreet's Fund Manager Insights podcast. And I'm your host, Radhakrishnan Chonat. Today, we truly have the privilege of speaking with Meeta Shetty, one of the few women fund managers in India. Now, with over 16 years of industry experience, Meeta currently manages the Tata Digital India Fund and the Tata India Pharma and Healthcare Fund. Her journey through notable firms like Kotak Securities, HDFC Securities, and Kavi has equipped her, I believe, with a very profound understanding of the IT, pharma, and the telecom sectors. She is also a CFA charter holder and holds a bachelor's degree in economics. So, ladies and gentlemen, without further ado, join me as I pick her brains and explore her insights on the market, her investment strategies, and the unique challenges she faces as a woman in finance. Meeta, it's an absolute pleasure to have you on my show.
Thank you. Thank you so much, Radhakrishnan. Pleasure to the entire team thanks to the entire team of AlphaStreet for giving us this opportunity. Just one addition, I also take care of Tata Focused Equity Fund.
Right.
Uh, so that those are the three funds which I manage, yes.
Okay, excellent, excellent. So, Meeta, let's start from the day zero, right? You have had an impressive career spanning over 16 years, as I told in the intro. Please walk us through your journey so far, and how did these uh, diverse experiences shape your approach to fund management?
Sure. So I think as any a teenager and trying to see how we all want to chart our careers, I was totally unsure of what I want to do clearly. So I started my hands into the equity markets because that was exciting. Initially, because of there were a lot of talks. I come from a Gujarati family, and there were a lot of talks about stocks and shares in the family, and then I used to also realize that some businesses end up doing really great, whereas some really falter off in their journey, and that curiosity kind of kept my interest high on the equity market side. So as I kind of grew and came into my years of early 20s, I started off as an equity advisor, just trying to lay my hands on whatever I could get, in that phase. And I started, let me just start my journey there. After about a couple of years of experience there, I realized that research or a fund management is what I would want to do, and I kind of started shaping up my career in that direction. For some personal reasons, I also had to take a sabbatical that allowed me to pursue higher education and even for come back even more strongly for what I wanted to do. So that kind of really shaped up to last about 10 12 years of what I have done clearly. So I think that is how it's all started. And once I came back into the industry, I went into a research profile. That's how most of us fund managers generally start with. Started looking at pharma sector at an analyst level. Worked at few of the one of the most renowned organizations today, like you mentioned, Kotak and HDFC, etc. So that's how that overall journey started. And in 2017, I got my break into Tata Mutual Fund. As a pharma analyst, I was hired, and obviously, I was given additional responsibilities to take care of the IT sector and the telecom sector. A year down the line, an opportunity came up to manage funds as well, and the Digital India, which is IT sector fund, and the Pharma and Healthcare Fund, which is Pharma Sector Fund. Both of them came to me, and I started managing them since November 2018. So that's how it is largely shaped up. But today, when I look back, I think those first 2 years of me as an equity advisor kind of really helped me clear my thoughts as to what I exactly wanted to do. So one thing was clear that I want to do something in the equity markets, but what profile and how to kind of build that over. I think those 2 years really laid the foundation of how I want to kind of build this up as I go ahead. And once I came back after my sabbatical with a higher qualification, that kind of also was a good turning point into my journey, which has been in the last 12 years. So I think, yeah, I mean, when I was starting at about early 20s, I was not sure. But when I look back today, I think it was like a jigsaw puzzle, which kind of just fit very, very well.
Brilliant, brilliant. As someone who I believe can be a potential role model. I have two little daughters, so I'm definitely going to show this interview. You have sort of broken the glass ceiling, I would say. So, what unique perspectives or challenges, let me say, have you encountered in your career, and how do you see the role of women evolving in the financial industry in India? Because the West, it's completely different, right? You have so many role models to look up to. So, what unique challenges did you face?
So I think one challenge, obviously, which I think the entire women community faces in this industry is that this industry does not have too many women. So that is a clear challenge because I've seen that in my career of the pharma analyst to then gradually moving up the ladder, I've hardly had women as colleagues. Even
Right,
when I look at in the industry and when I'm attending conferences and meetings, etc.
right.
Now, at least I see some participation, but in the initial years, it used to be barely one or two women that I see in a big crowd of say 100 or 200. I think the challenge is that we don't find us more in this industry, and then it kinds of it becomes a little bit I would say not discomforting because I think all the male colleagues that I've had are one of the wonderful ones, and they've all been. I've never felt that I was not one of their gender. I mean, it was very, very comfortable in that sense. But you do feel, I mean, you want your own peer sets, and sometimes you just want to be, you're more comfortable with your own gender at times. So all of those things, I think, not challenge, but yeah, sometimes it does come to my mind that I wish there were more women in the team. But I think challenge for at least personally, I would say for me was to come back because I took a sabbatical, and when I came back to just breaking into a role, and I started in about late 20s by then. So breaking into a role which I did not have experience of was clearly a challenge to me personally, I would say. But I think there have been some great, uh, people in my career journey which have really helped me break through that challenge and gave me the opportunity. So I think yeah, that was one challenge which I can think of. Other than that, I think yeah, I mean, more women in the industry would definitely make this industry more, will be more balanced, I would say, because I think the way women think about investments and the way we analyze stuff, there's no good or bad. It's just that we get a different perspective to the table,
True.
and it's very, very important that we have a good balance and a good mix of both the genders in this industry. So I think we're doing that gradually. I'm seeing things kind of moving in that direction. But still a long way to go. I think recent numbers, if I look at, we have barely 10-12% of the fund manager number that I look at an India level. So we are just at 10-12%. So I'm sure there's a long way to go.
Interesting. And you rightly said, women have a completely different perspective to how they look at money. You look at any Indian household, it is always the mother who runs the whole family budget. I always used to wonder, why women have, not come forward in finance. Maybe, this is an impetus for, more to come. So more power to you. Shifting gears, let's talk about the funds that you're managing at Tata, the Digital India and the Pharma and Healthcare Fund. Both are sector specific fund, right?
Yes.
And I was just checking, and looks like the top five. It's the Digital India Fund is the top five holdings are quite significant. So how do you manage the concentration risk there? Additionally, if I were to ask, what strategies do you employ to ensure diversification or stability across these sector specific funds?
Okay, so I would add focus also to that. So basically, whatever funds I'm managing, whether it be pharma or a health, IT or a focused equity fund, I clearly segregate the funds, or I construct the funds keeping two buckets in mind. One is clearly the stable portfolio, wherein you might not have a re-rating necessarily. Probably they are priced to perfection in terms of their valuations, but they are very consistent. They have a long history. They've gone through multiple cycles, and they've come out strongly in most of those rough times. So I think those are the companies which are basically compounders, which keep growing, and they've shown that stability over a longer period of existence. So those will be into my stability bucket, or say compounder bucket, as I call them. And the second bucket, which I segregate my, when I'm analyzing the stocks, I try to segregate the other bucket as an alpha bucket.
Hmm.
Basically, alpha bucket is nothing but GARP, which we at Tata AMC try and, which is our underlying philosophy. Now, what I say GARP is basically I'm trying to say that any company which is probably not doing well, maybe because the industry is going through some challenges, or there is a peculiar company specific risk, maybe the managements have changed or strategies have changed, etc., which has led to them not doing well. But and that also would mean that the valuations for them have got derated, maybe a sector or a company, whichever piece I'm looking at. And there is some visibility that incrementally we are starting to get comfort, we are starting to get where things will start improving or have already improved, but the re-rating has not happened. So basically, that's my alpha bucket. What I'm trying to do here is that the compounder bucket gives me growth, but no re-rating scope possibly. But my alpha bucket not only gives me a opportunity to play growth, but also a re-rating possibility. And we've seen, and markets, when you're trying to catch them right, particularly stocks which can re-rate, the kind of alpha that it can generate for the investors is one of the best times we've seen. Re-rating usually gives us one of the best returns. So that's what I try to do, whether be it IT or a pharma or a focused equity fund. Now, coming to your specific question on how do I take care of the concentration risk, especially in an IT fund where there is, the top 4 5 names will have a slightly higher weightage versus any other diversified fund. So, two things to keep in mind here. One is that if you look at the benchmark for these indices, sectors indices, they are extremely skewed. So, between 3 4 names, your entire indices will be covered most of the times.
Hmm.
So that we have to keep in mind, because as a fund manager, what I'm trying to do is, one, I'm trying to beat the benchmark, and second, I'm trying to be better than my peer set. So keeping both these things in mind, the benchmark is obviously the priority for all of us as fund managers. We have to keep benchmark weightages in mind, and somewhere we try to balance that act. Second is that particularly in the IT, the positions which you see is also an outcome of what I saw as an valuation and in terms of growth, etc. Because the mid and small, over the last 1 year, we've seen some rally come back to the IT, because 2022 as a calendar year was a year where IT clearly corrected meaningfully, and 23 was a year where we've seen some comeback. But the valuation difference between the large and mid, or say large and mid small bucket, was quite stark. So that allowed us to take that bet and try to see if I can generate some alpha out of it. So again, that the logic which I was trying to explain, that my alpha would be where I can see some re-rating and growth coming back. So it was also driven by that thought, actually.
Interesting. And I just saw that the Tata Digital India Fund delivered something like 25.7% of the past year, outperforming the benchmark that you mentioned, by a very significant margin. So excellent. Now, interesting that you spoke about the two buckets. I was very intrigued with the alpha bucket that you mentioned, and GARP, right? Growth at a reasonable price philosophy that you follow for the benefit of the audience. Can you give us an example of how this strategy influenced your investment choice? Let's say from the pharma healthcare sector, because that's where most of the re-ratings happen because of some FDA announcement. So give us some flavor of what happens.
Okay, so I think without taking names, I can on the stocks. So in the pharma space, we've seen one of the top 5 companies in the pharma and healthcare space, particularly the pharma space, was going through an extremely challenging time. All of their plants were under some of the other FDA governance issues and US FDA governance issues. And plus, there was also a challenge in their domestic growth business as well as the US growth outlook. So all of that was making the valuations look very, very cheap. And there was a point when we started realizing that yes, there is a complete trough that the company is right now in, but we think that it's a trough and probably things will start moving in the right direction. So we kind of did more detailing around each and every piece of the business and on their pipeline, etc. And as we started getting more comfort on it, we realized that this is where my alpha bucket clearly takes in all the tick marks that I would want to have in terms of improving ROIC, in terms of improving cash flows, growth coming back, and a potential re-rating, which was probably on the cards. So we tried and took that decision, and across the market there was this talk where there was so much negativity around it, but I saw possibly an alpha opportunity lying there. So that's how we took it in, not only in pharma fund but even in my diversified fund, which is a focused fund. I tried and to take a decent position into that, so it can be played out well. And obviously it played out eventually as we had anticipated, and it is delivered one of the best alpha returns, not only for focus but also for the pharma fund. So I think to catch them at a time when the things are going wrong, and then if you start doing your work and you start getting confidence that look, things are bad right now, but things will improve eventually in the next, say, maybe 4 quarters or 8 quarters. I think that's when we go all out and try to and the most important thing is that once you're convinced, it has to be also it should be reflecting into your weightages, because if you're too convinced about it and if you just end up taking a small position into that, that eventually won't help you deliver or take the most of the benefit of what your conviction is. So that is another important thing as a portfolio manager or a fund manager, that having a good conviction on a particular name and taking the right size it well in terms of your weightage is another most important critical aspect that I have learned over the last few years of my journey as a fund manager.
Interesting, very interesting. Meeta, can you walk us through your research process? And how do you assess the various parameters that you have, right? Obviously fundamental research, but other than that, management competitiveness, like corporate governance, growth. Help us understand, because you started your career also as a research analyst. Help us understand the unique research parameters that you have at Tata Mutual Fund.
Okay. So I think GARP is something which I already spoke, growth at reasonable price, which is what we try and implement. But I can share what are the broader areas that I generally try to keep in mind. So I think management quality is the foremost. I think that is a hygiene factor, and which we will definitely want to get it out of the way and check and ensure that that is in the right place. But second thing, most important for me would be that there can be a great management and they can be doing really well at this point in time. But is the business scalable enough for them to grow maybe 5x, 10x, or even bigger over the next, whatever, 15, 20, 30, 50 years? I think the scalability is very, very important, because even if the management is of the right quality and they're aggressive and they're doing the right things in terms of capital allocation or strategies, etc., but if the industry itself is a constraint beyond a point, or beyond, say, 4 years or 5 years or maybe few years, then it kind of will probably mean that yes, I can maybe make an alpha out of it in the near term, but in the longer run it may not. So I would be more excited on a business which has a huge scalability aspect. So for example, a consumption FMCG, right? I mean, it's a consumption thing, and we all will consume more, and we all will go up the ladder on the premiumization curve. Eventually, some will go earlier, some will follow later, but that curve will eventually keep on growing over the longer run, and that's why FMCG companies get the multiple that they get, right? On the contrary, something like a commodity or any other business where you don't know in the next 5 years how things are going to shape up, that eventually then reflects into the valuation. So for me, the scalability aspect is very, very important when I'm zeroing down on any of the, especially the alpha bucket, even compounder to some extent, but especially my alpha, because then I'm also trying to make higher returns from that bucket maybe. So scalability is one aspect I would say I would keep in mind. And then would be the pure numberings as to how the growth can be, uh, how the profitability can move, because growth is one aspect, but then eventually, are you paying incrementally lesser for the same amount of business? So that will be your profitability, that will be your working capital, that will be how you manage your cash flows. All of that would come into that. So basically, are you trying to churn the same asset in a much better way as you grow? And all of that would eventually mean that you're generating a higher ROIC, or your ROEs are starting to look better as you go. So I think all of that roughly is what would make. Obviously there's more to that and more deeper, and I'm sure we can go on for hours on this, but broadly, I think every penny that you spend, are you trying to generate better on that penny versus what you did last year, which is where I think we end up finding one of the best companies in the industry.
Very, very interesting. Again, sort of shifting gears a little bit. I'm going to ask you to become astrologer of sort. With the IT fund. Let's start with the IT fund. All of us have heard about the AI stuff that's happening, the generative AI. The Indian IT companies have traditionally been service-led models. So, do you see a huge disruption happening, or what is your analysis, sort of, how the Indian IT industry or the story is going to go forward?
Okay. So, see, I think Gen AI obviously is one of the technology changes which we've seen. I mean, every 10 years, 15 years, we see some new, shake up happening in the tech space. And this has been the case for multiple years when I look back. So I think Gen AI is one of that. Now, when you say the outlook, how does it look? I think one, we've seen last 1 year on the growth front, and Gen AI is outside of this. Last 1 year has been a year where growth has completely faltered off from about 7-8% growth that this sector was growing on a normal basis, on an average basis, pre-COVID years, has come down to 2%. So we've had an aberration that 7-8% went to 15-20%, and then we've kind of come back to 2% right now. Right. So one, we are coming out of a low base, and as you have more comfort in the way US, economy kind of unfolds, the interest rate cuts at some point will start happening, and that will kind of give a lot of comfort to clients sitting outside there in the US economy to kind of open up their wallets and start spending more. Right now, there's a more cautionary stance. So that itself will give us slightly better outlook versus what the last year has been in the next 2 years, 1 to 2 years from now. Then would be the Gen AI layer to it. Now, Gen AI, I think, probably will start, contributing to revenues in a not meaningful way, because I think meaningful will take a lot more time. But even in some way that companies will call out its contribution, probably from FY27. Now, one is that, I mean, there are two lines of thought. One is that Gen AI will add some additional opportunities for these IT companies to grow. And, some may be faster in adopting that, some may be a little slower, but eventually everybody will be there in terms of taking that share of the pie. On the other side, and the other line of thought is that there will be some leakage also which will happen, because the older technologies will become redundant, and if a company is working with the set of clients which are still on those older technologies, will eventually end up losing that piece of work. So I think there will be some balance that we will have to see how and where that equilibrium kind of sets in. But eventually, as I said, in the last cycles also, we have seen that new technologies always open up a far more opportunity for the Indian IT services, or for that matter, any IT services company. There is some leaking bucket in the first initial years till that shift kind of happens. But once a large part of shift has happened, we've seen that the pie grow bigger. So I think I see IT sector as a very, very structural story. I mean, today we are living in a world where, if you're not spending enough on tech, you're becoming irrelevant in the industry, whichever industry that may be.
True.
And you have to use it internally and externally for your customers both. So I think it's becoming more and more important for you to be ahead of the curve in terms of tech spend. So I see this as a very, very structural, industry going ahead.
Interesting. Now, if I were to ask about the Indian pharma story, we are the generic headquarters of the world in terms of API formulations, but we keep hearing these US FDA bans and all that stuff. So, what sort of an outlook do you have as a fund manager towards the Indian pharma sector as a whole?
Sure. So let's get the FDA piece out of the concern, right? So I think yes, we keep hearing and reading about it that there are concerns on plants, etc. But we have to remember one very basic fact that outside of the US, we are the second largest country in terms of FDA approved plants. Okay.
True.
And we have almost, in terms of value terms, we will be around close to 20% to their generic market in terms of supplies that we do, the exports that we do. But in terms of volume, we are very closer to about 40 to 50% band. So I think we have a very strategic role to play in terms of the US generic market today as we stand. And if we are the second largest in terms of FDA approved plants, we will have these, once in a while, we will keep seeing these issues getting cropped up. And that's only to make the processes little more better and, sharper and efficient as in terms of what the FDA demands, the US FDA demands. So I think these are events and they'll keep playing out. But at a broader level, because I've covered pharma for the longest time of my career, I've seen that if companies are good in their capabilities, and if they are very good on both R&D capability and on the manufacturing capability, these events do derail growth for the interim period, but eventually they do kind of turn out good investment opportunities for the entire investment community. So I would say that yes, these events are there, and one would have to probably live with it. I mean, these are events, and we cannot completely outgo them. So that is on the FDA part. As far as the broader outlook and whatever we keep hearing in terms of what's happening in the world, I think we have made a space for the formulations clearly. On API, yes, we are trying to see how we can kind of become as strong as we are in formulations. Government is also coming out with a lot of PLI schemes and encouraging India manufacturing on the API, on the chemical fronts. API is basically just the chemicals which go into the pharmaceutical product manufacturing. So we are doing a lot more groundwork here at a center level, at a country level, and eventually we will see the benefits of that. There is a Biosecure Act which is there in the US where they also want to have an alternate option other than China, where they can kind of start sourcing their API. So I think that also comes as a benefit to India, which is also, the thoughts are aligned basically on both ends. So I think that is another area which, outside of pharma, where we are already doing good, API is another area which will probably do well going ahead. And entire CRAMS ecosystem also kind of is going to benefit because of this Biosecure Act. So I think broadly we are very strategically placed, and incrementally we will see those benefits. Additionally, what has happened over the last 1.5 to 2 years is that US generic market was going through its own challenges because of fierce competition. There was a very sharp deflation which was going through all the way from 2015 to up till 2019-20, and that has started to move in a zone which is more acceptable. So there is still a deflation, of course, and US generic market is a deflationary market, but that deflation number has clearly tapered off from high single digit to maybe a low double digit number, to now coming to a low single digit band. So we have seen that happening over the last 1.5 years, and directionally, at least, it looks like we are in a good spot going ahead, at least for the next few quarters as well. So that's an additional layer of positivity which is added to whatever we are seeing in the sector over the last 1.5 years. So I think structurally we are good, and incrementally this cyclicality is also playing for our benefit. So whatever we spoke right now is largely on export, but I think even if I look at domestic as a market for pharma, we are clearly, it's a very stable market, and we keep growing in a band of about 7 to 8% band, and it's a good. It's more similar to what a consumer business would be in terms of growth, stability, etc. So I think that's a very stable market, and that is continuing to do well, and that will keep adding to a good cash flow and margin profitability for the companies.
Very interesting, Meeta. The third fund that you manage, my notes have very little, so my bad. So the focused fund, right? The Tata focused fund. Walk us a little bit about, what is the theme of the fund at a very high level?
Sure. So focused category basically means that you will have a mandate to own only a set number of stocks. In our case, that number is 30. So I cannot exceed 30 stocks at any point of time in my fund. It's a go anywhere fund in terms of market cap or a sector. So there is no mandate as to what market caps I can own and how much weightage, etc. So only mandate is that I cannot cross 30 is what I have to follow.
And is there any individual stock specific percentage within
Yeah,
this 30?
so that's largely the 10% which we
10%.
usually
Okay.
see
Okay.
for any diversified fund. Yeah, yeah. But the thought process is very similar, which I already touched upon, the compounder and the alpha bucket. Now focused because the number of names that I can add is capped at 30. Obviously the weightages play an even more critical role here. So when I was saying that if you're a high conviction idea and if I don't size it well, then it's not going to add too much value to the fund. That gets even more amplified in a fund like Focus because here the number of chalks anyways is going to be limited. So those weightages play a very, very crucial role here, especially in my high conviction ideas bucket, the alpha bucket. Here I generally go completely bottom up. I don't take sectoral calls. Whereas for IT and pharma, I might look at some sub segments and sub sectors to play some top down and bottom up. But Focus largely it's a complete bottom up kind of fund, and you would generally not see sector specific calls. It will be more stock specific ideas which I would want to bet on.
Excellent. Excellent. Mita, segueing a bit, we want to come back to you as a person. So what do you do off work? I mean, I know 24 hours is probably not enough for you, but the very little time that you do get, walk us through your hobbies.
Okay, so I like to play chess a lot. My day doesn't end without playing at least a game. So that is something that I really like and I do. I listen to music a lot. So I think that's one way to kind of get myself, it's like a meditation for me, a part of my regular workout and all. I think music is what kind of really charges me up for the next day. Look forward to, come back to desk. It really kind of balances the entire juggle and the entire ups and downs that we see, especially the way markets have been over the last few years. So I think those are the two things which really are there. A part of that, obviously, is friends and families and spending some quality time with them. Yeah.
Excellent. Meeta, I'm assuming playing chess is kind of burning calories for you. Instead of working out, you play chess to burn your calories. Is that what it is? Because this is the very unique thing that I've heard. People normally play chess not to relax, but to sharpen their brain. So what's the thought process behind that? To burn calories, sharpen your brains?
So yeah, it's just that thinking about the same thing in a very different way. Basically, just making your mind more analytical.
Excellent, excellent. Okay, that's very, very unique.
Yeah.
Meeta, so this is a standard question that I ask all my guests before I sign off. Maybe I'll add an additional thing. Favorite books of yours for the larger audience that is listening to this. Maybe add your music genres also. Favorite music genres.
Okay. So I think on the books, there's this one book which I think which resonates very well with the mass, and once you read, you kind of relate more to it, which is where I started my journey of reading. And I think Beating the Street by Peter Lynch is one of the books which I always realize that how basic it is. I mean, just reading the book makes you feel that how easy and basic he has kind of analogy wise whatever he's used and the kind of experiences that he shared as to how he went about picking some of the ideas, which are so, I mean, just invest in what you see. Basically, that's the underlying of that book. And I think anybody who's not even from this background can easily relate to that book and resonate to how to generate ideas, etc. So I think that is one book which clearly is always on my mind, whenever I think about books.
And music genres?
So music genre is, I think I am a big Lata Mangeshkar fan, and I've always adored all the music that she's had, and some of the 90s music, because I'm a 90s. I mean, in my 90s, I was obviously hearing a lot more music, India, international, everything. So I think anything on the 90s is clearly on my list all the time.
I think you were about to say I'm a 90s kid and then kind of.
Not 90s kid, I'm not.
That's right. Just last question from my end. What advice would you give to aspiring fund managers, especially women or teenagers who are probably going to watch this interview, who are looking to make a mark in the finance industry? What would be your biggest advice for them?
So I think that, this one thing which this role clearly gets you is, if you are curious about knowing more about companies, about businesses, about why some did well, why some didn't do well, I think that curiosity aspect is the underlying. And if you as a person are even, half curious, I'm sure you'll go even more curious as you get into this role. But curiosity is a very underlying factor, which I see and I look back that I think that was one thing which really was always there in my mind, and that this role clearly is for you if you are curious as a person to know more and kind of read more and try to get knowledge more about any of the subject. So I think that if you're aspiring to be here, and if you have curiosity as a underlying habit or nature, then I think this is clearly the role that you should be looking at, because eventually that will make you do more and do more detailing on whatever you're coming across, and eventually that will refine your processes as you go and grow in the ladder as a fund manager. So I think that is one thing which everybody who's looking at this career should keep in mind. Other than that, I think, as I said, we need more women. So I'll be more happy to see more women 10 years down the line in this field. And as Pierre said, in the industry. So yeah, largely that's it.
Wonderful, wonderful. It's been an absolute pleasure catching up with you, Meeta. Thank you for agreeing for this, and looking forward to many more such interviews and interactions.
Thank you, Radhakrishnan. Thank you, AlphaStreet. Pleasure connecting. Thanks.
Thank you.